sir, we are from Group 2. Our video is going to present about our project report. The company that we choose is Affin Bank and Hong Leong Bank. Hi, I'm Nohazika. I will introduce you about the main business activities of Hong Leong Bank and Affin Bank. Let's go to Hong Leong Bank first. So there are 5 main activities of Hong Leong Bank. The first one is retail business. The retail banking services offer credit cards, saving accounts, personal loans, home and car financing. And the second one is wealth management. Trust services, insurance, product and investment advising is their services for that speculative wealth management. And the third one is corporate and business banking. It is trade financing, business loan, cash and treasury management. The fourth one is digital banking. It is advanced mobile and online banking technologies. The fifth one is sustainability initiative, programs for environmental sustainability and financial inclusivity. Now let's go for Affin Bank. So for Affin Bank, there are also 5 main activities for the business. The first one is retail business. Retail business includes mortgages, personal loans and deposit account. Second one is corporate banking, cash management solution, trade financing and working capital financing. The third one is Islamic banking. It is a Sharia compliant investment and financing choices. The fourth one is investment banking. It is a corporate restructuring, capital raising, purchase and sale transaction. And lastly, for the Affin Bank is sustainability and CSR. It is aligned with UN SDG, environmental protection, community and development.
Okay, thank you Ika. Let's move to the next part, which is the financial ratio. In this report, we cover the 4 ratio, which is liquidity ratio, activity ratio, profitability ratio and the leverage ratio. The first one, let's go to the current ratio. Current ratio is the under liquidity ratio. That means company abilities to meet its short-term obligation when it use the short-term assets. The formula is simple. The current asset we divide by the current liabilities. So the first example of our company is Hong Leong Bank Berhad. The ratio is 1.16 ratio to 1 and the Affin Bank is 1.11 ratio to 1. So it shows that the company for the Hong Leong Bank have 1.16 ringgit assets to quickly cover its 1 ringgit liability. And the Affin Bank, it has 1.11 ringgit to cover its 1 ringgit liability. Quick ratio is another important liquidity measure that we only focusing on the most liquid asset like cash and receivable. The formula is simple, just quick asset divided by current liability. So for the Hong Leong Bank quick ratio is 0.208 ratio to 1 and the Affin Bank is 1.099 ratio to 1. So it shows that Hong Leong Bank have 21 cent liquid ratio to cover it 1 ringgit short-term liabilities and Affin Bank has 1.099 ringgit to cover it 1 ringgit short-term liability.
Hi everyone, today I want to talk about activity ratios and profitability ratios for Hong Leong Bank Berhad and Affin Bank. So the first one is Hong Leong Bank Berhad activity ratios. The total asset turnover is 0.0270 ratio 1, indicating that for every 1 ringgit of total assets, the company generates 2.7 cents in revenue. This ratio reflects the efficiency which the company utilizes its asset to generate sales. Account receivable turnover for Hong Leong Bank Berhad is 22.0440 ratio 1, showing that the company collects payment from its customers approximately 22 times per year. This is a strong indication that the company manages its receivable efficiently and converts them into cash quickly. So we move to Affin Bank Berhad activity ratios. The total asset turnover is 0.0203 ratio 1, meaning that the company generates 2.03 cents in revenue for every 1 ringgit of total assets. This reflects a lower level of asset utilization to generate revenue. A lower turnover ratio may indicate inefficiencies in using assets effectively. Account receivable turnover for Affin Bank Berhad is 4.9981 ratio 1, showing that the company collects payment from its customer nearly 5 times a year. This suggests that the company is moderately efficient in managing collecting receivable while lower receivables turnover compared to peers may imply potential delays in collection flow. So we move to the next part, which is profitability ratios. We look at Hong Leong Bank Berhad profit ratios. Profit margin sales, the ratio is 1.4891%, meaning the company earns approximately 1.4949 cents in net income for every 1 ringgit of sales. This ratio provides insight into the company's ability to convert sales into profit. While the figure indicates that the company is profitable, a closer review may be necessary to determine how this ratio compares to industry benchmarks. The next one is return on common shareholder equities, which is ROE. This ratio is 11.23%, indicating that the company generates approximately 11.23 cents in net income for every 1 ringgit by common shareholders. This reflects a relatively strong performance in utilizing shareholders' equity to generate returns. We move to the Affin Bank Berhad profitability ratios. First one in profit margin on sales. The ratio is 0.3943%, meaning the company earns approximately 39.43 cents in net income for every 100 ringgit of sales. This indicates a lower proportion of sales revenue being converted into profit. Next one is return on common shareholders' equities. For Affin Bank Berhad, ROE ratio for the Affin Bank Berhad is 3.71%, showing that the company generates approximately 3.71 cents in net income for every 1 ringgit of equity invested by common shareholders. This ratio highlights the company performance in generating returns for equity investors. Now we move to the next person.
So we dive to the last ratio, which is leverage ratio. What is debt to asset ratio? It is the how much a company assets are financed by its debts. The formula is simple, so total liability divided by total assets. For the Hong Leong Bank, it has 87.89% debt to asset ratio, and Affin Bank have 89.44%. So for the Hong Leong Bank, it has 87 cents for cover its liability, and for the Affin Bank has almost 19 cents to cover its liability. So it shows that Affin Bank have a higher debt to cover its liability in 1 ringgit for asset. So what is debt to equity ratio? So it tells us how much the company's debt versus the company's equity. Formula is straightforward. Total debts divided by total shareholder equity. So for Hong Leong Bank Berhad, it has 0.47 debt to equity ratio, and Affin Bank has 1.9159 debt to equity ratio. Hong Leong Bank has a higher reliance on borrowed fund rather than Affin Bank has 1.92 ringgit for every 1 ringgit shareholder that don't rely much on their debt. That's all. I pass to.
Alright, next, my name is Khairul Aisyah Humaira binti Khairul Muzamil, and I'm going to present the financial ratio analysis of Affin Bank's Berhad and Hong Leong Bank's Berhad for 2023. So first, liquidity ratios, that we have two: current ratios and quick ratio. For current ratio, Hong Leong Bank recorded a current ratio of 1.1621, indicating short-term liquidity. This was due to selective credit approval and efficient collection of receivable, which reducing non-performing loans and keeping liabilities on check. Next, for Affin Bank's current ratio was 1.1121, reflecting moderate liquidity. This was because of its investment in loan expansion and digital banking upgrades, which increased assets but also raised customer deposit as liability. And next, for quick ratio, Hong Leong Bank's quick ratio was 0.20821, reflecting reliance on long-term loan and investment. Although this limited immediate cash availability, it supported future profitability and for their company. In contrast, Affin Bank had a quick ratio of 1.09921, indicating a higher level of liquid assets. This shows its focus on maintaining cash reserve despite their expansion of company. And next, we're moving on to activity ratios. Total asset turnover. Hong Leong Bank achieved a total asset turnover of 0.027021, showing better asset utilization due to the technology-driven operation and selective lending last year. And Affin Bank's ratio was 0.02031, reflecting slower revenue generation as it expanded into less profitable segments and invested heavily in digital transformation. For account receivable turnover, Hong Leong Bank's account receivable turnover was 22.04 times per year, reflecting efficient credit management and fast collection from other companies. Affin Bank's lower turnover of 4.94 times per year was due to aggressive loan insurance to higher risk borrowers. Next, for profitability ratios, we have profit margin on sales and return of equity ROE. So profitability ratios, Hong Leong Bank reported a profit margins of 1.4891 to 1, showing strong revenue generation due to high margin products and tight cost control. But Affin Bank's profit margin was 0.3943 to 1, limited by high operation costs from digital investment and Islamic banking expansion. And next, for ROE, Hong Leong Bank achieved a high ROE of 11.72%, reflecting cost-effective operation and strong equity management. Meanwhile, Affin Bank's ROE was 3.70 due to heavy debt financing and slower equity growth, reducing return to the shareholders of Affin Banks. For debt to asset ratio, Hong Leong Bank's debt to asset ratio was 97.96%, reflecting a careful debt management through internal capital generation. Affin Bank's higher ratio is 89.44%, resulted from aggressive borrowing to fund loan expansion and digital upgrades. And for debt to equity ratio, Hong Leong Banks maintain a conservative debt to equity ratio of 0.47 to 1, balancing debt and equity to reduce their financial risk. And for Affin Banks, their ratio was 1.91 to 1, reflecting a heavy reliance on borrowing, increasing its financial vulnerability despite their supporting growth. So to conclude, Hong Leong Banks outperformed Affin Banks in profitability, asset efficiency and financial stability due to selective lending, efficient credit management and prudent debt control. So Affin Banks was strong in liquidity, faced a high financial risk due to aggressive expansion and reliance on the debt financing. That's all from me. To the next person.
So let me summarize this whole project on suggestion for Affin Bank and Hong Leong Bank to improve their current performance. So for the first aspect is current ratio. For Affin Bank, improving the collection of receivable, reducing non-performing loans, and optimizing inventory is a crucial step. For Hong Leong Bank, with its strong current ratio, it should maintain selective credit approval and fast collections and a balanced approach to managing assets and liabilities. The second aspect is quick ratio. Affin Bank should focus on holding more liquid assets through effective cash flow management and broaden its liquid asset base to reduce dependency on specific sources. As for Hong Leong Bank can strengthen its quick ratio by growing liquid reserves, improving cash management, and conducting regularly liquidity stress tests. The third one is total asset turnover. Affin Bank can boost its asset turnover by targeting high-yield markets, leveraging technology to streamline operations, and reallocating resources to more profitable areas. As for Hong Leong Bank, it should sustain its performance by focusing on operational efficiency, optimizing its asset portfolio, and expanding into high-demand markets. The next one is account receivable turnover. Affin Bank should adopt stricter credit approval processes, offer early repayment initiatives, and use predictive analysis to monitor overdue accounts. However, for Hong Leong Bank, it can maintain its strong turnover by prioritizing lending credit-worthy customer and investing in modern credit monitoring systems. The fifth one is profit margin on sales. To improve profitability, Affin Bank should control costs using automations, streamline operations, and promote high-margin products like wealth management services. As for Hong Leong Bank, it should focus on high-yield markets or high-yield products, cost efficiency, and customer-centric innovations to sustain its profit margin. The sixth one is return on equity, which is ROE. Affin Bank can enhance its ROE by prioritizing high-yield investments, improving efficiency, and returning earnings for
reinvestment. As for Hong Leong Bank, it should sustain its strong ROE by refining its investment strategies and retaining a significant portion of earnings. The seventh one is debt to asset ratio. Affin Bank needs to reduce reliance on debt by generating internal capital, refinancing high interest obligations, and considering equity financing. Nonetheless, Hong Leong Bank should maintain its low debt to assets ratio by optimizing its capital structure and emphasizing retained earnings. The last one is debt to equity ratio. Affin Bank should lower borrowing reliance by increasing equity financing and reducing unnecessary expenses. Then again, Hong Leong Bank can maintain its stability by continuing prudent financial management and operational efficiency. In conclusion, both banks have strengths to build on and opportunities to enhance their performance. By adopting these tailored strategies, Affin Bank and Hong Leong Bank can achieve sustainable growth and long-term stability. That's all from us. Thank you.